JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 12th of October 2022. So yeah, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our jfdbrokers.com website, which you can always check out for more information about us. Now then, guys, jumping into the charts. Before I jump into the charts, I can see there in the chat room, Uwe, good morning to you too. Yep, I hope everybody's having a wonderful, I hope you and everybody else is having a wonderful start of Wednesday. But yeah, jumping into Nikkei, look, there are a bunch of interesting charts that I want to go through, but some of them I have already mentioned. So if you watched my previous videos, then you'll probably understand where I'm coming from here and what is my outlook. So with Nikkei, I'll pretty much say the same thing here. For the downside, I'm looking for a drop below the 26,222 territory. For the upside, I need to see a push somewhere above this hurdle here. Now this 27,062. However, I think that I'm gonna change that a little bit, and I think I'm gonna stick to just the psychological 27,000 mark, because at the same time, if we push through that 27,000 mark, then yes, we could also go above the 21-day EMA. So pretty straightforward. Shanghai Composite, just a quick update on this one. So we're getting a nice little retracement here to the upside. So we found good support near the 2,957. We did pierce through it. This is the level that I was aiming for, and I said that if we do drop below this and stay below it, then yeah, I'll go lower. We did move to the downside. Initially, it was providing good support. Then we did move to the downside. We dropped below it, and we reversed then back to the upside. So the only problem here is with the upside is the fact that we are struggling with that 2,987 territory right here. Ideally, I would prefer to see a push above the psychological 3,000 mark, but again, let's go slowly on this. Let's go step by step. So, and with the downside, I would say, yeah, if we remain below, actually, I think this is something that I need to draw very quickly. If we remain below this downside line, somewhere around here. Now, it's a tentative downside line, don't get me wrong. It's not something to maybe focus on too much, but let's say this way that you know, as long as we remain below it, and I think that this is where the 3,000 mark could not work probably. So yeah, okay, this is where I have to kind of, I think that redo this analysis a little bit, because basically, what I'm trying to say here is that, look, I mean, yes, if we do push above the 3,000 mark, then we could see a larger correction here to the upside. But if the index remains below this downside line here, then the downside scenario is still not off the table. Because if you remember a while ago, I talked about these scenarios when, for example, initially we have a huge decline, let's say, and we have a huge decline, and then we have like for several days, for example, or even weeks, we can have like this gradual decline. So this means that this could end up breaking to the upside later on at later stage, but yeah, and the breakout could be quite significant. Now, until then, the trend is still to the downside. So the only thing is, like I said, you can just kind of keep that somewhere in the back of your head, because if suddenly you see this one pushing nicely to the upside and then breaking this downside line, now that could lead to a bit of up move here. So be very careful with this. Keep that in mind. Just like I said, I wanted to mention this this pattern. It's like yeah, it could play out, but again, a confirmation break is needed, as always, as everywhere. Whenever I kind of, when I do my analysis, I say this. So a confirmation break is needed, and not only that, we also kind of would like to see that being supported with, let's say, the price staying either above or below a certain key important level. Now, like I said, coming back to this point, I would say I will remain cautiously bearish. If we do drop and stay below the 2,957 territory, I'll go to the downside again. If we do see a push back above the psychological 3,000 mark, then maybe a little bit of a correction here to the upside could be possible. So yeah, this is my kind of new analysis here on Shanghai Composite. So let's see how this is going to play out. AESX 200. So this one continues to slide, as I said before, as long as we remain below the 21-day EMA and the 6,694 or 700 level here. If we remain below that, then yes, the downside scenario is still the more important one. But initially, as you can see by the arrows drawn here, initially I am aiming for the this inside swing high of the 29th of September, which is around the 6,573 territory, and then we will take it from there. The German index, DAX, yeah, this one's quite interesting too. I would say we are having some trouble here with the downside. I mean, it is drifting lower, but very, very slowly. It seems like it wants to make this as a as a possible kind of bullish flag here. However, way too tight, so that's why I rather wait for a confirmation break here before, or no, sorry, not a a confirmation break, but also like a like a more clear indication of what he wants to do here. Because at this point, I would say this way, I will stick to my rule. I said before that if we remain below this highlighted territory, which is below between the 12,228 and the 12,359 levels, if we stay below this, then yeah, I'll continue aiming lower. But if we start pushing above this 12,359 and the 12,439, there we go. But if we push above this 12,439 level, then yeah, at the same time we could break the 21-day EMA, and we could go a little bit to the upside here. So so yeah, at the moment I would say yep, everything's looking quite bearish still. Yes, the cash index, we're seeing the cash index kind of rebounding a little bit. Again, as I said before, it seems like it does want to do make an up move here. Like it wants to see this as a nice, maybe kind of weirdly shaped bullish flag. But again, at the moment we're not really getting that. So in order to go higher, I need at least a push above this 12,439 level. For the downside, yes, if we continue to trade below that 12,228 level right here, then yes, I'll continue aiming to the downside. Currently, we are just oscillating around this level on the cash index. Kai Uwe, yep, I can see you there in the chat room. Hello, hi from Germany. Hello, good to see you here. So yep. And this is where I'm jumping back into the charts, guys. NASDAQ 100. So, okay, this one continues to trade within the falling channel. Everything's fine. Everything's okay here. I would say, pretty much according to the rules. So I would say, yeah, as long as it remains below that 11,000 mark, or even better, this 10,967 territory, yeah, I'll continue going lower at the moment. And my target is actually somewhere near the lower side of this falling channel. I don't have really like a clear level here or such. I'm just gonna aim for the lower side of the of this falling channel. If it breaks, okay, that's fine. But that's kind of overdoing my target. That's absolutely fine. Extra profit, but yeah, like I said, at the moment I'm just aiming for this, and then we'll go from here. Yes, the cash index is correcting a little bit back to the upside, currently trading at around 10,880 zone. So basically above yesterday's close. but still below that 11,000 mark. So let's see if the bulls have enough steam to push this one back to the upside. If they don't, I would say, yeah, I'm continuing to aim lower. S&P 500, also quick update. So, oh, by the way, yesterday the Nasdaq was the biggest loser, guys, and then followed by the S&P. Dow managed to close in positive territory, but as we know, yeah, the kind of the more important ones, because you know the S&P covers a little bit of a more broader market, so yeah, it kind of captures a little bit of a wider sentiment across, you know, or sentiment across a wider amount of companies. Looking at this, again, some would say maybe, you know, we could see here maybe a possible double bottom forming or something like that, which, to be honest, I'm not excluding that. So, but again, if we want to consider that, then certainly we need to see a nice rebound here. But again, at the moment, I mean, will we get that? If we get, great. We could go higher, but I would prefer now, I would say, I would prefer, in order for me to consider maybe the upside, I would like to see a push back above this territory, somewhere above this territory, this 3,640 mark. And if we do climb above this hurdle, then yes, I'll go maybe for a larger correction to the upside. I need to get rid of this highlighted zone. I think I'm gonna highlight this instead. I think this could be a little bit more interesting. And yeah, if we clear this territory for the upside, then I'll go towards a larger correction to the upside towards this downside line taken from the high of the 16th of August. Now jumping into DXY, the dollar index. Now we're seeing a bit of weakness here in the dollar, but still we remain above this 112.56. Look, yesterday we had a retracement, but this hurdle held. Today, and then we pushed back up. Today we're showing a bit of weakness again. However, the day is just starting, so don't kind of rush into anything. For now, I'm still kind of, aiming for the upside as long as we stay above this hurdle. If we drop below this hurdle, then I will consider a correction here to the downside towards this upside line taken from the low, the 11th of August. Now, gold. Gold is very interesting and tricky at the same time, so be careful with that one. So we're stalling right now. As I said before, look, I mean, yesterday we had a retracement, and I talked about that, and I said that, look, maybe from here we could retrace back to the upside. And also what I said before, that look, yesterday I was in my video, I was mentioning this. I said that don't be surprised if you see something like a doji. So yeah, we got something like that, so great. We had a push higher, but look, by the end of the day it kind of still ended up being the same place. So I would say at the moment I'm just observing this. If you're looking for some lower levels, then certainly a drop below the 1660 level is required. If you're looking for some upside, I would probably be, I would leave the upside, the buying right now, because again, I don't have like a clear breakout level here for the upside, at least even in the short run. Yes, don't get me wrong, it could go closer to the to this 21-day EMA again. It could travel higher, maybe to even would fail to reach the yesterday's high, but at the moment, that's why I'm gonna be, like I said, on the careful side. Yes, I am considering the fact that there could be maybe a retracement here, but given that I don't really have a clear level, so that would be a little bit of a guess. Of course, you can start searching here, maybe from something from the past, something maybe around here or something like that, like the 1675. It could be the case, but way too close, guys. I mean, it could give us a little pop here. It could also fail, for example, to reach the 21-day EMA. It could come close to it, but fail to reach exactly that level. So that's why I always say watch the area, not exactly the level or the line. So here in this case, that's why I considered this retracement yesterday as a success, because I was talking about this little retracement. So it happened in one day, not like in a couple or something like that. So that's also fine. And then we retraced back down. So basically, it's showing that the bulls are not really on the stronger side yet. So what's next? Basically, as I said before, this 1660. That's what I'm looking at for the downside. For the upside, at the moment, I am just I'm not going to mention anything in terms of the upside because, to be honest, it's not even clear. Even if we push above the 21-day EMA, we do have this downside line, which got violated, I understand, but it might, maybe this time play out. So we kind of have to be cautious on that. Now, silver. Haven't looked at the silver for quite a while, and look at this. I mean, after we had a fantastic move to the upside here, I think that was like last week. We did push higher, we did move nicely to the upside, we cleared this level, but we found resistance near the 200-day EMA. So this is where it's we can look at levels for a breakout, but probably not as targets, like potential targets. Now, again, depending on where we are, of course, don't get me wrong, but at the moment, I mean, I'm watching how well these EMAs of mine here are working out, so I'm gonna, let's say, continue considering that. But one thing that I'm looking at here is this upside line. Now, it's a little bit on the tentative side. I do understand we only have like 2 touches, and even not really ideal touches, because we can also draw something here. So I would say I'm gonna probably do that, and I've done it already. So yeah, if we at the moment, I would say this way: as long as we remain below the 21-day EMA, I'm gonna continue aiming for this upside line, maybe even together with this 18.78 level right here. So that's just an extra level that I'm going to keep an eye on, but mainly I'm going to keep an eye on this upside line. If we clear it, then my next target is this other tentative upside support line drawn like this. So you choose, you pick, but again, we cannot exclude the possibility of seeing this one drifting a little bit further south here. WTI oil. So yeah, nice correction here to the downside. Yesterday I talked about this and I said that, look, keep your eyes on this 21-day, not the 21-day, the 23.6% retracement on the Fibonacci, and I said that as long as we stay above it, we could see a nice rebound here and a push back up. But if we start falling below it, I will consider a larger correction here to the downside. And look at this, we've managed to reach the 38.2 where we had a nice beautiful hold up, so that's great. Everything's working out perfectly here, I would say, right now. But at this point, I am just observing this one because I don't, when it goes here, let's say it didn't really, let's say, go all the way towards this upside line, or it found good support near the 38.2. So at this point, I would say, if you're looking for some lower levels, then keep your eyes. I'm not going to keep your eyes on this 38.2% retracement on the Fibonacci, drawn from the low of the 30th of September and up until the high of the 10th of October. So I'm not gonna remove this yet because so far it's working. So far it's working out nicely. If we do drop below the 38.2, then my next target is going to be the upside line, maybe together with the 50% retracement here on the Fibonacci, because here, as you can see, we also have the 21-day EMA. So good potential target to be tested. Can we go there? Let's wait and see. At the moment, I am just observing the price action, and this is where my risk-averse me, inner me, goes in and says, if I want to go higher, then 93.62. That's what I'm watching. That's the current highest point of October. A nice good clear move above it may attract more buyers into the game. Now, natural gas, guys. This is something that I look at sometimes. I haven't picked up on this for quite a while, but I don't know if you remember a while ago, like when I was talking about like USD against US dollar against the Singaporean dollar. I mean, I was saying that, look, that's like the COVID the COVID gauge, basically, is like how bad the COVID problem is in Asia. So yeah, now the natural gas chart is like to show how bad the situation in Europe is. So so at the moment we are having a bit of a decline. So okay, look, whenever we have some sort of kind of something is kicking off with Russia and Ukraine again, like we have natural gas spiking, we have like worries arising again, and all that stuff, which is logical, of course. Understand that kind of affects the market, but the interesting bit here is that, look, that natural gas has been declining, although we're going into the winter time. So everybody's worried about like natural gas, that and everything that but natural gas prices are declining. So it's kind of doesn't really, and we also have the explosion in the pipeline of Nord Stream. So everything's kind of really unlogical here, I would say. So that means that there is something in the background. So it seems like maybe at the moment here, Europe is really trying hard right now to, go and buy natural gas from somewhere else. I mean, of course, the beneficiary here is the U.S. But yeah, I mean, let's see how that's going to play out, of course. But again, if suddenly that somehow disrupts, because here the thing is that because there is an alternative right now, although quite expensive one, but still an alternative. The prices here, if you think that they should be rising, but they're not really, and you can see that we're right now like stalling here a little bit. So it seems like natural gas here is waiting for the next, some sort of a next big move in the economy or on the political arena, because it seems that we're waiting for some sort of a news or something that that kick off here. Either it would push it to the upside or to the downside. From the technical perspective, you can see that yes, we're kind of stalling here. So somebody, I think that even would let me just try to see if I can. Yeah, somebody might even say that, hey, maybe we're having something like a diamond shaped here, so. So yeah, I mean something like that, but okay, I mean let's not overcrowd our chart. But anyway, let's keep it short and simple. Basically, let's see that let's wait for the next kind of big thing, because look, although you would think that the recent kind of exchange of explosions between Russia and Ukraine that that kind of happened could have like moved this chart a little bit, but you can see that it didn't. So like I said, that's why there is something in the background which is sitting that maybe, like I said, maybe Europe is finding alternatives. However, of course, the alternatives are way more expensive, but I think this is getting offset by the high inflation, and people are kind of that's why the prices are currently being maybe capped or not capped. I mean controlled, by extra spending from the government. So yeah, that kind of is maybe holding it out a little. But let's wait. It cannot really go too long again. I mean, something will probably happen again, which will trigger a sell-off here or a huge buying activity. But again, at this point in time, I cannot really say anything, but you can just monitor this, and eventually I think this could present itself with a nice opportunity later on. BCH USD, which is Bitcoin Cash. Now, I looked at this previously. Look, I mean, I've drawn this triangle pattern here. This is quite interesting, and to be honest, it has been working initially, but now it's like just, it's just like trading inside here. I think that eventually this is not going to work out, this triangle pattern. We're not really going to get something like a big, breakout or anything. So probably I'll keep it for now, just out of interest and curiosity. But I think that the crypto world at the moment is not the best place to be in. And of course, we're looking at the whole kind of European legislations coming out, like in terms of crypto. So that's also not working well here for this. For this asset class. AUD JPY, so jumping into a few pairs very quickly before I run out of time again. AUD JPY, similar. I talked about this yesterday, so the same analysis is valid as long as we remain above the 200-day EMA. There is potential for maybe a bit of a retracement here back to the upside. Once we start dropping straight away below the 200-day EMA, I'm going to go towards that lowest point of August of this year, near the 90.52 territory. AUD USD. So we managed to reach the target here, and the target was near the 0.60, 62.54, something like that. We've hit that, and just to show you what that level was in the past, I was talking about this, and I said that, look, this is what I'm aiming for. We could see maybe the pair drifting a little bit lower, maybe stalling somewhere in between these two levels. So the 0.6214 and the 0.6254. We have a 40 pip kind of 40 pip range here of support. So still could maneuver around here somewhere, but it's going to be quite interesting to see if we can actually rebound from here. Well, at the moment I am just playing the waiting game a little. USD JPY so continues to climb slowly. It's not really actually even climbing, it's just grinding higher, so it's like slowly drifting, sailing, let's put it even better, sailing through this, through this barrier, through the 145 level, continues to stay above it. So at the moment I am going to continue aiming to the upside as long as we remain above this 145 level. For the downside, I need to see a break of this upside line and a drop below the 21-day EMA. USD CAD. So look, yesterday I talked about the USD CAD and I said that keep your eyes on this barrier, this 1.3833, because if it holds, we could be seeing something of a range here. So look, I mean, we had a good push, a fantastic push to the upside yesterday, a bit of a tease, a bit of a, jumping around here, and I think that let's see if this is gonna hold, continue to hold. If it will, then we could see a drop lower, but we could see a move to the downside and maybe towards the lower side of this potential range. I mean, I'm not saying that this is a range yet because it's not the range yet, but potential range. If we do drop somewhere below this 1.3695 territory, then yes, I'll go to the downside. For the upside, I need to see a push above the 1.3833 territory again, and then I'll go to the upside. GBP CHF. So we fell below the 1.10 zone. Great. This opens the door for lower levels, but at this point, probably I need to kind of control my appetite here in terms of the downside scenario, and I think I need to draw something like this. So long story short, if we do drop, given that we dropped below the 1.10, I will go further south, but only up until here, in between this, or should I say, around this 1.08 level. So I will aim to this territory, this area. I'll aim for that initially, as long as we stay below this downside line and below that 1.10 zone. If we start popping back above it, I'll go to the upside. GBP USD. So this one's interesting. And look, I mean, I talked about this a while ago, and as you can see by my arrows that have shifted. So I have considered this idea here, and look, and this is where I was saying that, look, keep your eyes on DXY, keep your eyes on USD CAD. I mean, if this is going to start like moving lower here, expect GBP USD to to rebound from this area perfectly. And I talked about this level, this 1.0931. So great, quite happy about this. Let's see if we can actually get that rebound now. I mean, at the moment we're stalling above it. Can we get that rebound? Let's wait and see. If we start dropping below it and we stay below it, then I'll go lower. But if we don't stay below it, we'll just get a false breakout, and that just kind of could attract a few more buyers into the game here. Now, euro against the Hungarian forint, guys, something that you don't look at very often, but it's quite interesting. So this is the kind of the worst performing currency in Europe right now, the Hungarian forint. Of course, European Union is trying to press hard Hungary for all the kind of not being favorable to the European Union, which I believe that it's kind of it's very questionable, let's put it this way, the way everything's there is an element of bullying, I think. That, however, let's see how the whole situation unravels. But I can see that they're definitely trying to hurt the Hungarian forint here a little bit, and the only problem here as well is that that Hungary is kind of having the similar approach as Turkey had a while ago, where they were not trying to kind of increase interest rates in order to control inflation, in order to control devaluation of their currency. But I think that yes, initially it's kind of the same scenario. Honestly, it's like identical almost. But let's see if Hungary can come out of this, because at the moment I would say it's quite interesting. Let's see if the Hungarian forint can strengthen a little bit here, because at the moment it's quite overstretched here, oversold, this pair. I mean, I'm talking about the euro HOF. So if it can, correct a little bit back down, maybe towards that 21-day EMA, that would be quite interesting to see. But at the moment, yeah, we need to be very careful here. Like I said, because we have some pressures from the EU. So hopefully this can withstand. But let's wait and see. Euro Aussie, guys. Euro Aussie. Looking at this picture here, I mean, I would say at the moment, yeah, we had a fantastic move to the upside here. We had a beautiful push through this 1.54 territory. Great, that's wonderful. Now let's see if we can go, further north. And so far, we're going further north. My next target, as I said before, is the 1.5562. That's what I was aiming for. So far, so good. And I'm only going to aim for that level. I talked about this pair in the beginning of this week. Last week, I said that, look, if we push above this 1.54 territory, I'll go higher towards that 1.5562. So far, we have already made like around 70%, 75% of the route. So great. Let's see if we can do the remaining one. If we reach only, like, say, 90%, I will take it as a beautiful success. And finally, EURUSD. So there we go. Beautiful correction here back to the upside. However, I would say, yeah, it is trying to move back up, and I would say yes, if it climbs back above this 0.9733 territory, then I'll consider a move to the upside. I'll consider a move towards that 21-day EMA, but then I'll still be very careful with the downside here, because maybe it could provide a resistance, and then another drop lower could be possible. Now, similar story as with GBP/USD. Also, I'm watching this, and I'm watching DXY, of course. If that's gonna drop, then we could expect a nice pop here to the upside. If DXY continues to hold, maybe we could still aim for that 0.96 territory, and then we could go from there. So, I mean, we're at the interesting spot right now. Do not be surprised, for example, if suddenly we see like something like a pop here to the upside. And by the way, keep your eyes on the economic calendar today, because we have from the US coming out the PPI numbers for September. So those are expected to kind of go a little bit on the lower side, and if it comes on the lower side, I mean, that might be seen as a positive for the dollar, because basically that would mean that the Fed could go further with their interest rate hikes, so which could play out positively for the dollar. So keep that in mind. But yeah, guys, that's it for this session. I really hope you found it useful. Thank you very much for joining in and watching till the end. I really appreciate that. In general, for all the time when you put your for your views, when you put your likes, when you put your comments, I really appreciate that. So thank you very much, guys. That means a lot to me. So if you want to catch me tomorrow morning, as always, at my Traders Espresso, 6 o'clock GMT time. For now, have a wonderful trading day. Stay safe. Have your stop losses in place, and everything will be fine. Thank you very much, and bye-bye.